So my news review presentation's topic is the dollar's weakening in full swing. Will it change the landscape of investment? First, to talk about terminologies, there is quantitative easing. When economic times are hard, people worry about losing their jobs and grow worried about spending money. Businesses see their customers staying away, they start losing money and may have to lay off workers. Normally, the bank of a country would try to make things better by cutting interest rates. Lower rates mean you get less interest on your savings, so it's less attractive to save money than to spend it. And lower interest rates make it cheaper to borrow money, so it's easier to buy a new house or car or expand your business. Second terminology is spread. A spread can have several meanings in finance. Basically, however, they all refer to the difference between two prices, rates, or yields. In one of the most common definitions, the spread is the gap between the bid and the ask prices of a security or asset like a stock, bond, or commodity. Spread can also refer to the difference in a trading position, the gap between a short position, that is, selling, in one futures contract or currency and a long position, that is, buying, in another. So what happened is US dollar is showing signs of weakness. So why did this happen? This is because the spread of coronavirus, which wound down in Europe and Japan, has continued to increase in the US, resulting in relatively greater economic uncertainty. Second, the US administration has been continuing its economic stimulus package and US Central Bank (FED) has been continuing to print dollars. FED's aggressive easing policy has led to a sharp drop in US government bond rates, reducing the relative attractiveness of investment. This means that overseas investors' demand for dollars has decreased. Fourth, the spread between US and German government bonds, which stood at 220 BP, is now reduced to 80 BP. According to UBS, while the coronavirus continues to spread in the United States, India, and Brazil, the preference for safe assets is declining because it is unlikely to lead to an economic blockade. Also, the growing political uncertainty ahead of the US presidential election in November can be another reason. And finally, the European Union agreed to create a large-scale economic recovery fund on the 21st, reviving expectations for a recovery in the Eurozone. So what may be the potential impact of this event? Weakness of a dollar could change the world's investment landscape. As the dollar weakens, foreign assets are usually in the spotlight, which their prices go up. In fact, the US stock market has been locked in the box since early June, except for some technology stocks. The S&P 500, which hit 3232.39 on June 8, closed at 3257.3. Recently, overseas stock markets such as China and Germany have surpassed those of the US. Gold also jumped to $1,843 per ounce, the highest since September 2011. Oil prices also rose by 2.5% on the same day, recovering to levels in early March. Because crude oil is traded in dollars, prices will go up when the dollar falls. Prices of other raw materials such as copper will also strengthen. So what is my opinion? In the end, I think that FED will have no choice but to buy stocks. If the economic recession is prolonged due to the spread of coronavirus, they will have no choice but to buy ETFs like the Bank of Japan did to boost the stock market.